Leveraging property investments for your retirement strategy. Diversifying your investment portfolio to include real estate can be a smart move when planning for retirement. In this comprehensive guide, crafted by renowned economist Dr. Pooyan Ghamari, you will gain valuable insights on utilizing property investments as a key pillar in securing your financial future post-retirement. Key points for success. Understanding property investment for retirement. Benefits and strategic advantages. Mitigating potential risks. Setting clear retirement objectives. Defining your financial goals. Establishing tangible milestones. Selecting the ideal property. Property varieties and features. Location significance and impact. Financial strategies and funding. Diverse investment options. Navigating mortgage dynamics. Optimizing rental returns. Effective property management tactics. Methods to boost property value. Tax planning tactics. Unveiling tax incentives. Harnessing tax-deferred accounts. Effective exit strategies. Selling approaches and considerations. Crafting a lasting legacy. Unveiling the potential of property investments for retirement. The advantages of property investment. Real estate investments bring forth a multitude of benefits, particularly for retirees seeking financial stability. Consistent income. Rental properties offer a reliable income source, essential for sustaining your lifestyle in retirement. This income can cover daily expenses, medical bills, and leisure pursuits. Appreciation potential. Properties typically appreciate in value over time, presenting opportunities for significant capital gains upon divestment. Real estate has a strong track record of long-term appreciation. Inflation protection. Real estate often outperforms inflation, safeguarding your purchasing power and ensuring your income keeps pace with rising living costs. Rental earnings tend to rise in tandem with inflation, providing a buffer against its erosive impact. Tax benefits. Property investments come with various tax advantages, such as deductions for mortgage interest, property taxes, and depreciation. These deductions can substantially lower your taxable income. Evaluating risks and prudent considerations. Despite the lucrative prospects, property investments entail certain risks that necessitate careful evaluation. Market volatility. Fluctuations in property values can impact investment returns. Economic downturns, market shifts, and other variables can influence property valuations. In the realm of property investment, several key considerations come into play that can significantly impact your financial success and retirement planning. Let's delve into these essential factors to navigate the world of real estate investment with prudence and foresight. Financial stability and maintenance costs. Ensuring the profitability of your property investment necessitates a keen awareness of ongoing maintenance expenses. From routine upkeep to repairs and renovations, these costs can directly influence your overall financial viability. By meticulously managing and budgeting for maintenance expenses, you can safeguard your investment's long-term sustainability. Tenant management challenges. Navigating the complexities of tenant acquisition and retention is a critical aspect of property ownership. The quest for reliable tenants is often fraught with challenges, as problematic renters can disrupt cash flow and jeopardize property value. Mitigating tenant-related issues such as late payments, property damage, and vacancies demands a proactive and strategic approach to safeguard your rental income streams. Liquidity considerations. Real estate investments offer lucrative returns but lack the liquidity of other financial assets. Selling a property to access immediate cash entails time-consuming processes and associated costs. Understanding the implications of real estate's illiquidity is essential for prudent financial planning, especially when quick access to funds is imperative. When strategizing for retirement through property investment, a structured approach can pave the way for a secure and fulfilling future. Setting retirement objectives. Defining retirement needs. Begin by meticulously outlining your retirement financial requirements, considering factors such as income projections, lifestyle preferences, and healthcare expenses. By estimating these needs early on, you can develop a robust financial plan tailored to sustain your desired standard of living post-retirement. Establishing financial milestones. Implementing concrete savings targets at different life stages serves as a roadmap to monitor your financial progress effectively. Regularly recalibrate these goals based on market dynamics and personal financial circumstances, ensuring alignment with your retirement aspirations. Diversifying investment portfolios. Striking a balance between property investments and other financial instruments is integral to mitigating risks and optimizing returns. Diversification shields your portfolio against market volatility, enhancing overall stability and growth potential. Selecting the ideal property. Property diversification strategies. Choosing the right property type is pivotal in maximizing returns and minimizing investment risks. Residential properties, including single-family homes, apartments, and condos, offer diverse income streams and appreciation potential. Their relatively manageable nature and broad tenant appeal make them compelling options for property investment endeavors. In navigating the intricate landscape of property investment, a strategic approach that integrates financial prudence, tenant management acumen, and portfolio diversification can pave the way for a robust and rewarding investment journey towards a secure retirement future. Investing in real estate offers a plethora of opportunities for individuals seeking to diversify their investment portfolio and generate stable income streams. Whether you are considering commercial properties or multifamily units, strategic decision-making plays a pivotal role in ensuring the success of your investment venture. Commercial properties. Office buildings and retail spaces present lucrative prospects with higher rental yields, although they often require significant investment and meticulous management. These properties are typically leased for extended periods, ensuring a steady flow of income for investors. Multifamily units. On the other hand, duplexes, triplexes, and apartment complexes provide multiple income streams from a single property, thereby minimizing vacancy risks. While managing these properties may be more intricate, the economies of scale they offer can be advantageous for investors in the long run. Location selection. The location of your investment property is a critical factor that can significantly impact its income potential and appreciation value. Conducting comprehensive market research to identify areas with strong job markets, low crime rates, and reputable schools is imperative. Properties situated near essential amenities such as schools, hospitals, shopping centers, and public transportation hubs tend to attract tenants, thereby enhancing rental income and property values. Moreover, focusing on areas with growth potential, such as those undergoing revitalization or infrastructure enhancements, can lead to substantial returns on your investment. Financing your investment. Funding options. Securing adequate financing is paramount for a successful real estate investment endeavor. While utilizing personal savings can minimize interest and fees, it also heightens personal financial risk and limits leverage potential. Traditional mortgage loans from banks or credit unions offer competitive interest rates, albeit requiring a robust credit history. Private lenders provide more flexibility and expedited approval processes, making them viable options for unconventional properties or borrowers. Investment groups, including real estate investment trusts, REITs, allow investors to pool resources, diversify risk, and capitalize on larger property acquisitions. Mortgage considerations. Understanding the terms and conditions of your mortgage is crucial for making informed financial decisions. Comparing interest rates from various lenders can significantly impact your overall costs, while comprehending loan terms, repayment schedules, and potential penalties for early repayment is essential for effective financial planning and management. Maximizing your real estate investment potential. Investing in real estate offers a multitude of opportunities for financial growth and stability. To maximize your investment potential, it's crucial to implement strategic approaches that can enhance your returns and secure long-term success. Here are key strategies to consider. Strategic financing. Choosing the right financing options can significantly impact your investment returns. Consider exploring refinancing opportunities to lower interest rates and monthly payments. By refinancing, you can free up cash flow for additional investments or expenses, while also providing the opportunity to switch from an adjustable rate to a fixed-rate mortgage for more stability. Maximizing rental income. Effective property management plays a vital role in maintaining and increasing rental income. Implement the following tips to optimize your rental property's profitability. Tenant screening. Conduct thorough background checks on potential tenants to ensure reliability and minimize risks associated with late payments or property damage. Regular maintenance. Keep your property in top condition to retain current tenants and attract new ones, thereby reducing vacancy rates and avoiding costly repairs. Competitive pricing. Set rental rates based on market conditions and property value to maximize income without overpricing and risking longer vacancies. Regularly review and adjust rents to align with market trends. Enhancing property value. Increasing your property's appeal can boost rental income and resale value. Consider the following strategies to elevate your property's market value. Strategic renovations. Upgrade key areas such as kitchens, bathrooms, and living spaces to enhance appeal and justify higher rents. Focus on high-return improvements that cater to tenants' preferences. Curb appeal. Maintain the property's exterior through landscaping, painting, and repairs to create positive first impressions that attract potential tenants and buyers. Energy efficiency. Install energy-efficient appliances and systems to lower utility costs and appeal to environmentally conscious tenants. Energy-efficient properties often command higher rents and lower operating expenses. Tax optimization. Leveraging tax benefits can significantly enhance the profitability of your real estate investments. Consider the following tax strategies to maximize your returns. Deductions. Take advantage of deductions for mortgage interest, property taxes, insurance, and maintenance costs to reduce taxable income. Keep meticulous records of all expenses to maximize deductions. Depreciation. Spread the property's cost over several years for tax purposes, reducing annual taxable income and providing substantial tax savings over time. Capital gains. Benefit from lower tax rates on long-term capital gains from property sales, ultimately increasing your overall returns. Strategically plan your property sales to qualify for long-term capital gains treatment. By implementing these strategic approaches, you can optimize your real estate investment potential and pave the way for sustained financial success in the dynamic real estate market. Maximizing wealth through strategic property investments. In the realm of real estate investment, navigating the complexities of IRS regulations is paramount to financial success. One key strategy that savvy investors employ is the utilization of 1031 exchanges. By deferring capital gains taxes through reinvesting proceeds from property sales into similar investments, individuals can preserve more capital for future growth. This powerful tool not only aids in wealth accumulation but also lays the foundation for a secure financial future. When contemplating exit strategies for property investments, meticulous planning is essential to unlocking the full value of one's assets. Timely market exits can significantly impact returns, making it imperative to monitor market trends and economic indicators for optimal selling opportunities. Additionally, ensuring properties are well maintained and attractively priced can bolster their market appeal, potentially leading to higher sale prices. Leveraging the expertise of real estate agents to navigate the sales process can further streamline transactions and secure favorable deals. Beyond financial gains, property investments can serve as a means to establish a lasting legacy for future generations. Thoughtful estate planning, including the incorporation of properties into estate plans, ensures that assets are managed and distributed in alignment with one's wishes. Exploring options such as gifting properties to loved ones or charitable causes can not only benefit beneficiaries but also carry potential tax advantages. Setting up trusts to oversee property assets offers a structured approach to asset management, providing control and protection for beneficiaries while potentially reducing estate taxes. In the pursuit of transforming property investments into robust retirement plans, careful planning and strategic decision-making are paramount. By following a comprehensive approach and seeking guidance from industry experts, investors can cultivate a reliable income stream and fortify long-term wealth accumulation. Driven by prudent investment strategies and a forward-thinking mindset, property investments can offer financial security and peace of mind, paving the way for a comfortable and fulfilling retirement journey.